Arcadia Capital is a proprietary investment fund, and we describe it as proprietary because it has three essential components. One is a unique portfolio of public securities, trading algorithms that we've developed, as well as a strategy to profit from market volatility and big market movements, which we expect to be a component of future markets from now on. Arcadia really consists of three components: data, insight, and innovation. We do a lot of studying and analysis. We have a lot of personal experience as investors, entrepreneurs, computer scientists, and we hope that that will give us the insight to develop what we've seen as proprietary investment strategies that give us a superior risk-adjusted return perspective. And so the combination of the public securities, our proprietary trading algorithms, and then what we describe as a black swan position, which is a position that can profit from market movements, unique market movements that occur more and more regularly, right? And so the financial crisis is an example of a black swan, but we're seeing much more of that these days, especially, the Fed talks about raising rates, the market moves, the market recovers, the market goes back and forth. So we're seeing a lot of things that play into our strategy and give us what we believe is an effective perspective to generate high returns with lower risk. And so our investments philosophy fundamentally is protect capital and manage risk. We are trying to build a business here that invests. We're not just making investments, right? And so if we protect our capital and manage our risk, then understanding these components in the market, they will enable us to profit from volatility and uncertainty and therefore maximize our risk-adjusted returns. Arcadia really is three components. The first is preserving core capital. So we have a portfolio of investments that have been time tested to produce higher yield with very little volatility. And therefore, we have a lower risk profile to that core capital portfolio. But on top of that, we can take that yield and only that yield and invest it in proprietary trading and what we call the Black Swan Fund, which looks at market movements. So the combination here can generate significant return to us. But what's interesting is that since we're only investing profits, that even if we're completely wrong, right, we still haven't impaired our capital. Yet if we've got it right, we think we can generate a superior return. And that's where we essentially get to our assumption about risk-adjusted return. So here are the components of our success. First and foremost, we see these underpriced securities relative to yield and risk. More importantly, we're seeing more frequent and intense volatility in the market that is not going to change. And now we've developed strategies to profit from both of these, a mispricing of assets on one side and a mispricing of volatility on another. And that combines to give us our proprietary valuation algorithms and our proprietary investment strategy. And then one word about cryptocurrencies. One of the things that we're seeing is it's getting a lot of attention, and whether or not there's going to be an increase in value or whether or not there's a sustainability, we don't really have a position on that because we do know they will be very volatile. And there are a few assets which can be liquid and traded frequently, which will enable us to profit from the volatility that we're going to see in crypto and in digital assets. And so it's a component of our trading strategy, and I think one where we can profit, but it is one where whether or not we have a long-term position, it doesn't really matter because our conviction is in the volatility, not in the ultimate valuation. So why Arcadia? Well, we regard ourselves as rational investors in an irrational market. So rational investors in that we take a long-term perspective, we do a lot of rigorous analysis, we have a lot of experience as investors, entrepreneurs, etc. But we also know the market will move irrationally. It's a bipolar schizophrenic, as Warren Buffett has said, and we know that given that irrationality, there will be unique opportunities. And so the combination of experienced investors and entrepreneurs and innovators, along with the strategies that we've developed, along with rigorous discipline and focus, enable us to develop strategies that will work in any market condition. And we expect market conditions will be volatile, and we expect us to be reactive to those market conditions and develop the appropriate strategies. As we mentioned, security selection, I can't emphasize. We are very rigorous. We've spent a lot of time developing these algorithms, and we really maintain and update our algorithms to be responsive to the market. And so when we construct our portfolio, the key here is we look for this low volatility in high yielding public securities, which is the basis from which we will then reinvest in proprietary trading and other strategies. But the key is to play with profits. And that is a George Soros term, but what he really gets at is there's opportunities to make big returns, but we're never going to risk our core capital at those attempts. We will only put profit to work to generate additional profit. So one of the main points to our business strategy is risk management, because risk management is essential to a sustainable competitive advantage. We are not trying to be investors, we're trying to be a business that invests, and therefore we're looking for a competitive advantage, and we're looking for that to be sustainable. We cannot be sustainable without a risk management strategy that is effective. And so we constantly analyze risk. We have very strict criteria for the securities that we invest in, and we reinvest and reinvest and reinvest our time and effort into risk management to be more effective. And that, we believe, is one of the keys to our sustainable competitive advantage. So, in summary, Arcadia targets superior risk-adjusted returns. And we've discussed the proprietary investments, the algorithms, and the black swan positions. But I can't emphasize enough, it is risk-adjusted returns that we care about. And we want to protect the downside while generating an upside while assuming less risk. And so that is the key to Arcadia and Arcadia's sustainable competitive advantage, and why we believe we are a unique opportunity.